So I've been talking to you for a long time about the importance of a fact finder, and today I'm going to show you a real role play on how it's done. Hi, my name's Jeremy Smith, and over the better part of the last 15 years, I've been an agent, a manager, an owner-operator of a brokerage, and over the last 5 or 6 years, I've been a business coach, traveling the country to help agencies and agents grow their practices. Stay with me because today I'm going to help you grow yours. If you've been on YouTube before, then you know the game. Please hit subscribe and ring the bell. All right, guys, so before we get started today, what I normally do at this step in the game is I normally do what I call a needs analysis or a fact finder. It takes us 10 minutes or so. It just gives me kind of a snapshot of your vitals, your health, your experience, what your goals are, that type of stuff. When I get done with that, it'll give me a really good idea, I think, of exactly what we need to talk about. You guys can obviously hit me upside the head if I forget anything. Is it okay if we just start with that?
Sure. Yeah, it's fine.
So the first question I always kind of ask is, I'm sure just looking at you two and by my appearance of your health, you guys do make your own financial decisions, yes?
Yes.
Okay. Tell me real quick, how many kids do you have?
I have 2.
Okay.
And I have 2.
Okay, and how many grandkids you got?
We got 4.
Okay. Are the kids local? Are they around, or are they?
We have some local and some. They're all in Iowa. But
Okay.
Some's a couple-hour drive away.
Okay. But as far as decisions and your retirement and all that stuff, you guys do all of that yourself, correct?
Yes.
Correct.
Okay. Can I ask you just real quickly? Is it just? And there's no right or wrong answer to this. Everybody's got different philosophies, but is it important to you guys to leave money and leave inheritance to the kids and grandkids?
Well, that's our hope.
That is 100% what I want to do.
Okay. Some people say I want to spend the last penny on the last day, and some cut their life half and half to leave money. So there's not a right or wrong answer. So let's start with some easy stuff here. Tell me just in general about your health.
I am pretty healthy. The only medication I take is a cholesterol medication.
That's it?
That's it.
Okay. Charlie?
Yeah, I'm about the same. That's the only thing that I have, and that's just been recent.
No other prescriptions other than cholesterol medicine for either of you?
No.
All right, that's awesome. Have you guys had any procedures in the last 3 or 4 years?
I haven't had any.
I had rotator cuffs surgery.
How long ago was that?
3 years.
All good?
All good.
Throwing a baseball again?
Maybe not, but
Golf
maybe
ball.
that's what caused it.
What about anything scheduled?
Nothing.
Nothing? Okay. Tell me about your current health coverage. Are you on Medicare?
We're both on Medicare. We have Medicare supplements through Blue Cross Blue Shield.
Okay, hold on. I assume you may or may not know this. Is it Plan F?
We both have Plan G.
Okay. You know what your premiums are?
Around, I think mine's 117, and I think Charlie's is 120. Within a couple of dollars, I'm pretty close.
Okay. Seems a little high, but okay. How long? I guess you've only had that probably for a year, right?
Almost 2 years.
Okay. Something definitely we'll talk about here when we get done with this.
Okay.
Not that there's astronomical differences when you're 66 years old, but being able to look at the rate hike history of a company and how fast, they're all going to go up, but being able to look and see the history in which they go up each year and getting locked in with a company that you don't have to worry about 20-25% increases each year is really important. But we'll come back to that. Let me shift gears a little bit. Talk about long-term care. Talk about your parents for a second. Are your parents still alive?
Both of my parents are in their 90s, and they're both alive. Doing
Okay.
good.
Okay. Yours?
I'm only half that lucky.
Okay.
My mom's still here, but my dad had a stroke about 5 years ago now, and he's no longer with us.
All right. Not to pry too much, but tell me a little bit about how all that went down? I mean, so he had a stroke. How long was he alive after he had the stroke?
About just under 2 years. Farmed his whole life. You know what it is. There's things that happen, and we don't really have a real rhyme or reason. But he was in a nursing home for about 18 months, and there was big sadness in that.
Did he have long-term care coverage?
He did not.
How did you guys pay for that?
As you can imagine, right out of the billfold.
Okay. So just again, I don't want to. We can come back to this, but you got a scenario where you guys know the value and the risk of long-term care situations that you guys don't have any coverage. Is there a reason for that?
No, probably the same as why he didn't have.
Okay, fair enough.
Everybody's invincible at this point in time.
Fair enough. We'll come back to that. Life insurance. You guys have life insurance?
We do.
Do you know how much coverage you have?
Yeah, we both have some permanent insurance. We both got $250,000 policies. She got hers cheaper, obviously, because she's a woman. But I think, you might have to tell me, but I think it's like just under $300, isn't it?
Yeah, about 250, 275, somewhere in there, I think.
Each?
Yes.
Yeah.
Yep. We've had it for a while, so we've got quite a bit of money in those policies as well.
How much do you have?
We got about $140,000 in those policies.
All right. So real quick, we'll come back to this again here a little bit later on. But there's been a massive change with how life insurance is done. Mortality tables have changed, and therefore the cost of insurance has dramatically dropped over these last few years. The other thing, people don't know this, when they talk about cash value inside your policy, if you died tomorrow, you would get your death benefit, right? What happens, do you think, to that $140,000 of cash value?
You lose it?
Yeah, it's just use it or lose it. So if you don't use that to improve your current life insurance policies, it's wasted. So we'll come back and talk about that. Do you have what they call final expense coverage? Okay. And a lot of people don't. I will say that some people don't understand what the difference between life insurance and final expense is. I will say that life insurance is for the living, is what they say. Final expense is for the dead. So the final expense is meant to cover your costs if something happens to you. The life insurance is to pass on to those kids and grandkids. So that may be something we want to talk. It's cheap. It might be something we can talk about down the road. Shift gears. Last topic. And I don't need to know super specifics here, but tell me a little bit about your retirement. Tell me what vehicles you use in your retirement.
Go ahead.
Well, we've always
Go ahead.
We've always had some money in the banks. I was conservative in nature, so we used CDs a lot, so I knew what kind of interest rate I was going to get. That was our quick money if we needed it for new roof. Or
You getting pretty good rates on that now?
oh yeah, you bet. Yeah.
Tell me, just give me a ballpark. How much do you have in CDs, for example?
About 50,000.
Okay.
We keep $10,000 to $20,000 in the bank just in checking accounts.
Okay.
Yeah.
On that CD, I can guess, 1%, 1.5%?
Yeah, right at. It's a little bit better than it was a couple of months ago, but still really low.
And you just flip that, every 2 years, or how long do you flip
No, we do it about every year now.
Okay.
They have better rates for longer, but again, we were going to use it for short-term expenses if we needed it.
And so that's kind of your emergency money, is what that is. Let me ask you a question. Are you adding to or subtracting from your retirement on a monthly basis? Is your retirement counts, is your net worth getting bigger each month with Social Security and other things, or is it going down a little bit?
No, we're not really adding anything. Kind of, we had 401ks that we were working on our whole life, and so we were kind of counting that on as our retirement money someday. But that obviously is against what happened in day-to-day life. So
you have a 401k still?
We do.
How much do you have in that?
We have I've got a little over 250,000, and she's right at 250,000.
Okay. You enjoying the market swings?
Gives you the gray hair.
Any other any annuities?
No.
Okay. You do individual stocks, anything like that?
No, I've done that in the past, and we've got the money in the CDs now. That's our reserve money. We're just not really playing on that now.
Okay, so retirement-wise, you're basically, with the incomes that you have coming in, it's basically paying your bills. It's basically a wash. You've got some emergency if the roof falls in money that you look at that CD, and then your retirement nest egg. Are you pulling interest? Are you pulling anything out of those 401ks?
We haven't had to yet.
Okay. 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 One more question on that. Do you guys consider yourself risk takers?
No.
Not at all.
I can say that we might have been at one time, but not now.
When we were younger.
Okay.
Yeah.
Okay. One more just basic open-ended question. When it comes to your retirement, what keeps you up at night? What do you worry about most when it comes to your retirement?
I guess having enough money in case I would have to go into a nursing home, or if I have some illness and insurance doesn't cover it all. I mean, it's basically help.
Okay.
Mine's making sure it's going to be here for us. That's what we're counting on in our future.
The money?
The money.
Okay. Well, let me just review just real quickly here. So you've got on your health insurance, Blue Cross Blue Shield, you're both paying $115, $120. Again, I think that there probably are some options out there that can save you a little bit of money. At your age, it's not going to be massive numbers, but it could be massive numbers to be with the right company going down the road as you get older, because you do know that those premiums are going to get higher and higher as you get older. Long-term care, I hear her talking about, her biggest concern. You've got an experience with it, so that may be something, we should talk about, at least show you what some of the options are. 10 years ago, the options for long-term care, they weren't not even comparable to what some of the options are now. And so I at least want to give you some of that information. Like I said, on the life insurance side of things, you both got about $250,000. You've got, it looks like about 55%, 60% of your death benefit in cash value. So there's, especially with your health, there's probably some huge things you could do on that standpoint. On the money thing, I guess my only, well, I don't want to give judgment, but you say I'm not a risk taker. Yet, as I look at this, you've got 92% of all of your money in the casino stock market right now, at a time when the stock markets went up for over a decade. And we live in a world right now we couldn't even have imagined months ago. So, being able to protect some of that may be something that we want to talk about down the road. So as I look at your stuff, there's some stuff that's going to take a few discussions. There's some stuff that's simple. As I'm a little bit concerned with the fact that I think you're probably not necessarily with the right company health-wise, just because of rate increase histories. I'm probably a little bit more concerned than that about your life insurance, just because I know with the stroke of a pen, you may very easily be able to pass on hundreds of thousands of dollars more to your kids and grandkids than you currently sit right now. I definitely am concerned about the long-term care fact that you don't have any coverage, knowing that's the biggest thing that keeps her up at night. And you kind of are saying the same thing. I'm sure that if you ever looked at options for long-term care, they weren't very good options in the past. I'm just here to tell you that there's combination options now that they didn't used to be. It's not always that pay it and use it or lose it type product that your parents probably had back in the day, or should have had, or could have had back in the day.
We've talked about it multiple times, but just didn't figure that it was something that we could really spend the money on at the time. So.
Yeah, I get it. So we definitely should talk about that. I'm most concerned with the fact that the time that we live in right now, when stock market's been up for going on 10, 11, 12 years now, straight up. There's not an economist or anybody out there that says, hold on to your hats, it's just going to keep going straight up. It's just a matter of whether or not we're going to get stagnant, maybe we get a little more bump for a while, or whether there's a crash at some point. I mean, I think most people think at some point those things are going to happen. You've obviously probably had a bad day in 2008. You got all that money back, plus it's grown since then. And so I think the first thing I'd like to start with is talking to you about some safe money options, and then we can kind of go from there. Okay?
Sure.
Okay, so that was the best we could do of a real-life role play. I've written down a couple things I want to just kind of rehash on what you just watched. Okay? The first thing was the decision maker question I asked at the very beginning. Okay? Make sure that they're the decision makers. If they're not, if there's a daughter that lives across the street, you might as well pack your bags and go and come back here in a few days. On the long-term care, I just make little innuendos. You know, almost, I hate to say this, but almost kind of shameful that, you know, Charlie should have known, you know, with past family experience that you know, it's a coverage that he needs to protect his family with. I explain the difference between final expense and life insurance. I always start out my money section with I don't need to know specifics. Just kind of eases the tensions a little bit, even though we very well may get into some of the specifics. I always ask if they're a risk taker. I ask their philosophies on passing money on, and what keeps them up at night. Those are personal questions nobody else asks that give some humanity to your meeting and also gives you some vital information that you need. I normally do a review like I did, and then if you've really seen how I did that, I talked about I'm concerned, I'm more concerned, I'm even more concerned, I'm most concerned, and I'm most concerned about the topic that I'm about to lead into and start presenting on. Okay? So there is some science to all of this. I hope that this really hits home with you. I've said it again numerous times. I think it should be the centerpiece of your entire sales presentation, every meeting you're ever in, whether it's a prospect, whether it's an old client. It makes you look professional. It gives you authority. It makes you look like you've been there, and you will continually build this fact finder, which I promise you will turn into a prospecting goldmine for you. Don't forget to hit subscribe and ring the bell and make comments. I promise I'll get back to you. Look forward to seeing you on our next video. Thanks for your time.